Welcome everyone to the TradePod podcast. How are you doing, Constantin?
Hi, Alan. Thanks for having me. I'm doing fine. How are you?
Good, great. So,
Perfect.
what is your story?
Of
I
course,
like to ask
sure.
that question.
Okay, thanks for having me. So let me give you a short introduction. I'm
Absolutely,
42
do it.
years old. I'm based in Germany. I'm married. I have three kids, and I always had some interest in the financial markets. My father was also trading besides his job. And in the early 2000s, I started with experimenting in the market itself by buying some certificates on an asset. And my interest grew over the time. And I, besides doing some courses and some mentorings that I took, I started full-time trading in 2013. So since then, I'm a full-time trader. I gained my
And what
knowledge.
what what did you do before it?
So I
Yeah.
did my bachelor in economics,
Ah,
like
okay.
most of the people do. And then I was working in startups and technical startups in Berlin because the startup scene in Berlin at that time was pretty big, right? But the affection and the interest in the financial markets was bigger. So I was already trying to trade while I was working somewhere else. And then I decided to go full time 2013, but I was more or less profitable at this time already. And I saved some money up. So I thought, let's give it a go. Let's give it a try.
How many
I,
months in runway did you had to try full-time trading?
uh,
Because you do have a risk that it's not going to work at the end of the day.
sure. So the step to full time trading, if you are not obsessed with it, is risky, first of all, right?
Yeah.
And so when you start trading, you have to be aware that in order to be profitable, it's like any other business, right? So it takes 3 to 5 years to become profitable, to trade every market cycle on its own. So this is the time you have to give yourself to make this the step into full-time trading. So this is the first thing I have to say. If you're trading on the side and you are still on the job, not during your job hours, but maybe afterwards or before that, you can do that. So it is really important that you are financially secure and have another income, which also takes off the pressure if you're trading or when you're trading.
But when you work like, let's say, a part-time job and you find a mentor, you learn from him, you need to learn also the fundamental aspect of the trading, you need to learn the technical aspect of the trading,
Mhm.
and then you transition to full-time. Well, that should be the plan. So how it was for you? Did you once you worked in the startup ecosystem,
Mhm.
did you had a mentor teach helping
Yes.
you to transition to full-time trading?
Yeah, not directly, but I had various ways. So the first thing I did was I was trying to build my own framework of the market itself. Then I looked into mentors. So at that time, it was a German day trader who explained some concepts to me. After that, when I was more trading on the portfolio aspect, so meaning long short portfolio, mostly in stocks, I also had a mentor that explained to me the portfolio approach. So what a mentor is doing is basically saving you time. So explaining you stuff, and you are avoiding certain mistakes that you would do on your own. So if you try everything by your own, um, this is not the way to go, I think. So a mentor will be helpful if he is experienced, if he is profitable, stuff like that. And well, the results will show you if you are able to trade full time. So if you are profitable for 2 or 3 years, you can make this transition from part time to full time if you think that this lifestyle is suiting you, right? Because trading is
Yeah.
also a lifestyle where where everyone that is in your uh, circle, so your family, your friends, have to agree with, or it should be able for you to do that, because especially in the beginning, or not in the beginning, in the early 2010s, where I was going full time, it was really stressful, right? Because when you don't have an additional income and you're trading and the P&L goes up and down, this can be really stressful for yourself. And when you are stressed, you are also affecting the people around you, right? Because your money is on the line, stuff like that. So those are also some considerations you have to be aware of and think about.
Yeah. So you've got an Apex funding account. Now,
I do.
what's your approach to trading? How did you got there? What's your risk
So my
management? Let's
general
start
day
with the
trading
let's
approach.
start with the yeah. Let's start with the
Okay.
approach to trading in general, and then we're gonna dive deeper.
Okay, sure. So first of all, you are trading your beliefs about the market. So you have to be aware of your beliefs of the market in general. So what do you actually believe the chart is doing, and what is trying to tell you? So this has to fit yourself, your being, right? And this is how you create a system that you can trade in a profitable way. So for me, like I said, I was trading intraday, then I was switching to portfolio, and now I'm trading fully intraday since 5 years. So on a short-term basis. And what I'm basically doing is a pretty simple approach. I'm looking at the price action. I have certain things on how I develop a daily bias over price is most likely to go. And my trades um, are framed around the previous day's high and low, the previous week high and low, and the previous month high and low. So non-negotiable levels that are fixed on the chart. There's no discussion about it. Yeah, when you hear people talk about levels, sometimes it's this level, sometimes it's this level. Well, at daily high and low, previous daily high and low, it's non-negotiable. And I see what price is doing. What is the likelihood of price breaking out to the upside? What is the likelihood of price reversing to the downside? And this is the easy explanation of my trading concept. And I frame my trades. So I have, besides that, I have a directional bias that is framed on the 50-minute time frame. And then I take my entries on the 1, 2, or 3-minute time frame.
Why 15 though?
Because
Because
I
it's
think,
simply
sure.
because it's
Because
simply more how to say um easier, so to speak.
when you're trading
Not exactly easier.
intraday, I think the 15-minute time frame is a good intermediate time frame to give you a trend direction. So when you're trading a 1-minute chart, a 50-minute candle, well, it's obviously 15 1-minute candles that can be on an asset like an NQ quite a lot of money. So if you have a trend change from the buy side to the sell side, for example, and you simply trade a 50-minute candle on a 1-minute time frame, this is enough to make money, right? So what you want to look for is obviously repeating patterns in the market. So you can't solely rely on price action on its own. So you want to have a setup that occurs over and over again in the market in order to be profitable. So
Got it. So you said you're more focused on short-term trading. Now, why did you quit? You had a portfolio, so you had something in long-term trading. Now, you quit because of the German regulations or because it didn't suit your lifestyle?
both. So we had some German changes in the regulation in terms of taxation. I don't have to explain it right now, or it's maybe too complicated.
Yeah.
Yeah. Okay. So I changed it because of the German tax regulations that were a little bit unfortunate for holding contracts, so CFDs and what are you going to call it? Options and stuff like that. So I went into prop trading. And the other factor obviously was that I am seeking instant gratification, which may sound a little bit stupid at the moment. But if a trading system, like I said in the beginning, is not suiting you 100%, you will be less profitable. So a short-term trading approach suits me way better, right? So what does that mean? This means, for example, if I'm trading the transitioning time from the European market to the New York market, to the US market, which is happening around 8 a.m. New York time, I can be done within a half an hour. And then maybe I come back at 9:30 New York time, where I can take a second trade. Or I do a trade in the last half an hour of the trading day. So I have chunks of time where I can actually trade, and then I'm done. And
Okay.
this is the perfect trading approach for me because I have a family, and I'm also a fan not to sit in front of the screen the whole time. So you have some things you can do in between.
What is your approach to trading in terms of strategies? Like, what is strategies you use? Like, what indicators are the most helpful to you?
Okay. So usually, I have two main strategies that I use. One is solely based on price action itself. So it's a naked chart, so to speak. You have candles on your chart, and you determine the trend direction by a simple market structure, which are higher highs and higher lows, and vice versa, lower lows and lower highs. This is it. And you have a main time frame that is giving you the trend direction. So besides the daily level where price is pushing into, the 50-minute is giving me the trend direction. So I don't take counter trend trades. That can work. So if you have a test and reject pattern is if, for example, if you have a new spike and price is pushing into a higher time frame level and gets rejected immediately, this is a test and reject pattern. But in general, you want to trade with the trend, meaning price, for example, is pushing into a level, into a previous day high, and you have a 15-minute engulfing bar or an order block that is forming and telling you, okay, now price is most likely going to the sell side of the curve. Like I said, time my entries solely based on price action on the 1 or 2 or 3-minute chart. So this is one strategy I have. And the other one is more indicator based, which is a strategy from a mentor of mine, Dr. Ken Long. And this strategy is based with linear regression lines, Pisars, and Bollinger Bands. Should I explain this in detail
So
a little
it's
bit?
not too complicated. I mean,
No, it's not.
you said three
Yes,
indicators, right?
three.
Regression line, Bollinger Bands, and
A Pisar, but this Pisar is attached to the linear regression line. It's not a usual Pisar because linear regression line smoothens out the price. You don't trade you trade the price, but the price is displaced in form of the linear regression line. That's the way to do it.
okay, so
And
it's not too complicated. I mean, to implement
no,
even. Yeah,
no,
it really depends on the asset you apply it to.
exactly. It depends. And well, this is a trend trading strategy. I am the firm believer that the price is behaving how it behaves. You can read this by solely looking at a naked chart. So my main approach. And it doesn't matter what you put on the chart itself, meaning you can give me any setup, any indicator template, and I will be profitable because when a price is moving into a previous day's high and is getting rejected, which is from time to time the normal behavior of price, a PISA will flip bearish, a moving average will turn down. And yeah, that's the way I think it is. And the easier the trading framework and trading approach is in general, the better the trading strategy is because it's easier to find potential flaws in the system.
And it's merely based on indicators, like no fundamentals at all.
I traded fundamentals a while ago when I had the portfolio approach, and it didn't work out because I became too biased. This was my main problem. So when I take in a portfolio approach, for example, and I base those portfolio approach on the PMIs, and when the PMIs in the US market are above 50, you expect growth and you expect the S&P 500 to rise. And when it's below 50, after 2 or 3 readings, you expect the S&P 500 to decline. And this is a potential bias, how you can structure your portfolio. And at the time I was trading this way, sorry, this didn't work out at all. So those economic factors right now don't play any role more in my trading framework, because if economic...
They are based simply on indicators, mostly.
Yes, yes. So, and if the economy is lagging, the Fed is going to print more money, and then the stock market is going up anyway. So,
yeah,
for me, it's not fitting
will.
my belief system. Right?
It's all interconnected, so it depends how you're gonna use it. But the price action does mirrors the fundamentals, so to speak, which you don't have to use it for it to be a profitable strategy.
Well, the first rule is don't argue with the chart itself. Don't argue with the price, right? It won't bring you any benefits. So, but it is always like the question is, oh, if you have a stock, let's take a stock, for example.
Okay.
And the stock is reporting earnings, right? And the earnings are exceeding the expectations of the analysts. There can be the sell-off on good news scenario. There can be the scenario that price, well, more likely than not, is going sideways because this was somehow expected, or it is pushing to the upside. And this is the same happening with fundamentals. So if you have a PMI reading of 57, for example, I've also seen sell-offs in the market, right? So for me, this doesn't work, and I solely look at the screen. I don't care about the numbers. So when I'm day trading, and obviously I'm aware of the news reading itself. So let's say 8:30, there are some news reading. I'm aware of that, but I'm not
like the rate card,
for example. So FOMC, like we had on Wednesday, I'm aware of that, but the number I don't care about. I just want to know when it's going to happen, and then I draw my little lines on the chart. Where is price likely to go? Do I get a confirmation on the 50-minute, or when I have high volatility, I sometimes take the 5-minute, and then I'm good to go. And this works surprisingly well because so I believe you have to be aware of those kind of things. Yeah, how fundamentals can influence price. Yeah, so you have a certain learning you have to do, but in the end, the simpler your approach to trading is, the better your profits will be. You know, so you have to understand the market structure, what is moving the market. Yeah, and when you understand this concept and everything around it, you take the simplest approach you can find, and that works for you.
And what about the risk management? The secret sauce of all traders.
So, risk management approach. Well, that's an interesting topic. So first of all, I think we will get into this a little bit later, but what I do with my mentees is they have to write down the life cycle of a trade, right? So what is a trade actually? What is a trade doing? So the trade starts, well, obviously with the entry point, right? And then the trade is moving into a certain direction. And what not a lot of people do is write down their specific trade management. When do they put their stop loss to break even? What's the initial point where you say, okay, that's it? I'm sorry. Let me close this. What's the initial point where you put your stop loss to break even? How do you handle a normal winner, and how do you preserve large gain abnormal winners? So in terms of risk management, over a sample size of, let's say, 100 trades, you have an average risk return ratio. Okay, let's say this one is 1.7.
Okay.
Okay. So out of 100 trades, the average return ratio is 1.7 R. People don't consider how they handle a trade if the trade is exceeding 1.7 R. What is your trailing management in this case? Okay. This is one thing.
Trailing management.
Yeah,
What do you mean?
trailing management, where do you trade out? I mean, you should let your winners run, right? But you also shouldn't give back too much if the trade is not working in your favor. Meaning, if your average return rate is 1.7 over 100 trades, 500 trades, whatsoever, you shouldn't give back more than 0.7 R, right? Because otherwise it becomes like, what's the point of this thing in general, right? So there's also a reason why you always have 1.7 R in return. How can you optimize that? What do you do in order not to give too much back? It doesn't make sense if you are 1.7 R in profit and you give back all of it. It's also
Okay,
not
so
very.
what do you do to improve? Well,
So what
the
do you do to
one,
improve? Yeah.
yeah, so one way is to journal and then to learn and so on and so on. So what's your approach to journaling as well?
So
Because it
I
does include into the risk management system approach or
yes.
principles.
Okay. So let me finish the risk management
Sure.
first, short, and then I'm going to talk about the journaling. So in general, so I'm trading with prop firms now, and my risk per trade is 0.25, so a quarter of a percent of the capital I have in general. In prop trading, you make your money with assets under management, not with just going all in on a funded account. This doesn't make any sense. So you want to gain as much AUM as possible in order to make a profit. Besides that, I'm a huge believer that you can make a lot of money with taking quarter of a percent and take a trade on a day trading basis, right? On a swing trading basis, something different, but on a day trading basis, this is easily doable to do 4% a month if you know what you're doing. I stop trading when I do 4 trades on a day, which is 1%. And I continue to trade. So I have four bullets a day, so to speak. Yeah. And if this works out and those trades run into profits, I keep on trading until I say, okay, that's it for the day. Time to go off. Because when you are in sync with the market, I also think you should to continue to trade if you have a good intraday run whatsoever. Yeah, you don't need to stop.
How do you feel
But
it?
well, it shows in your. So sometimes when I mark out the charts, so I do my preparation obviously the night before, and sometimes everything works out more often than not, and sometimes it doesn't, right? So what I also do, what I also advise is in the morning, do a test trade. See if you are in sync with the market. Either do it on a demo account or do it with the lowest position size possible. Just see if you get the bias right, see what's the feeling for the market. Is the market approaching your levels? Is it not approaching your levels? There have been times where I marked out my potential profit areas and the market turned every time like 5, 10 ticks before that. This can also happen, and you have to adjust to that. Right? So 4 trades a day, max is 1%. Luckily, this rarely happens. And if I do good trades, I continue to trade, right? And I have trailing mechanisms. So coming back to the exceptional large gains or preserving large gains, where let's say I time an entry on a 3-minute chart and I'm way above 1.7 R, let's say I'm 3 R, I scale down to the 1-minute chart and look for a market structural break. So this is my trailing stop loss. Yeah. Or when I'm trading the indicator strategy, the PSAR is my stop loss. Okay. Yeah. So this is my risk management. And in terms of journaling, so various approaches. What you should do is some sort of daily debriefing, right? So what's your plan? How do you prepare? How did you execute? And what to assess? And then you always have to ask on each of those points, do you want to sustain it? Do you want to improve it? And then what's the action behind it? Right? So how can you, let's say you have a plan, how did you prepare for it, but your preparation was not so good in the end? You have to take some action in order to have a better preparation. Right? So everything has to be really
Yeah.
structured. What is also also with the execution. What you also have to do in order to keep your business running and to be really successful is, so what I did for years is setting up a mentor trading account. So what is this? Well, a mentor trading account is all the things you need to do in order to be successful in trading. So let's say, for example, you have a profit goal
Yeah.
of in a month, yeah, approximately. You shouldn't set goals, but let's say you have a profit goal of 4,000 euro. Okay.
I would say in
You
percentages. I mean, it's what doesn't matter, but let's
yeah, well,
say
the MTA is based around dollar values. So
okay.
I have to take dollar values in this
Yeah,
case.
sure.
So you have a goal of 4,000 euros, and approximately within the month, you have 20 trading days. Okay. So a trading day is worth 200 USD. And now you split up those 200 USD into different tasks you have to do in order to trade and be profitable. This can be preparation. This can be also sleep good, finding balance, eat healthy, don't drink alcohol, be trading according to your trading plan. And to each of those tasks, you again attach a dollar amount, and this all sums up into 200 USD end of day. So it's basically a checklist that has to be in sync with your potential profit goal.
Okay.
Yeah. So at the end of the day, on each day, right, the sum should be 200 USD. So you need to do all those steps. And it's basically a checklist. And at the end, trading results come in sports. So they are not coming, well, obviously, every day you can make this amount of money. It doesn't work that way. But if you do an MTA for a year and you fill it out every day and you do the tasks you are supposed to do, you will be profitable, right? On the other side, if you are doing your MTA and you see, okay, last night I was a little bit hungover and I didn't trade according to the plan, and you don't attach the dollar amount to it because you haven't done the things you were supposed to do. So instead of 200 USD, it's 50 USD, for example. You see that the trading result you aim for didn't match or don't match the MTA itself. So there's a discrepancy in the things you do and the things you want to do, or the things you think you can achieve. Okay, so it's basically a checklist.
So it's a yearly test. Well, you do it every day, right?
Yes.
And then you go back after a year and you look at the results.
Yeah,
Correct?
you check what you have done actually, and if the result is matching the work you have done. So for me, when I'm mentoring people and they are not profitable, the easiest thing to do is to ask them, please go into your journal and filter out the trades where you haven't traded to your plan. So let's say, for example, the mentee is down minus 7%. Okay. And he's telling me, hey, this doesn't work. I'm not I'm not happy whatsoever. I say, okay, no worries. We will figure this out. Could you please open your trading journal and please type in, so obviously they have to do this,
Yeah.
trades not executed to plan. And then you will see often that out of those minus 7%, well, if not minus 7 or worse, people haven't executed according to their plan. Right? So you need to have those checklists,
Or
especially in
maybe,
trading.
it could be just an outlier, kinda.
Well, for minus
Well,
7%, then the risk management isn't on
yeah,
point. Yeah, but usually
yeah,
it's the
for
small
sure.
things. So starting with people don't having a trading plan, people don't keeping their risk in play, people that don't have a trading strategy that suits them and fits them. Right. So for me, for example, I can't trade. So I can trade every system, but I'm not happy with having multiple moving averages or having an Ichimoku cloud on my screen. I feel it kind of uncomfortable to look at it. Yeah. So this has to match up as well. Yeah. What I also recommend is, despite going a weekly review where you mark out the charts, write down what happened, do those things in lifetime. When I'm talking to my students, I tell them, hey, take a 1 minute chart and mark out every structural break or point that you see on the chart in real time, and record yourself and talk about what you are seeing and what you are actually doing on the chart, right? People are totally missing this. They think that trading is a pretty easy game due to the fact that you can be right, or that you are right 50% of the time anyway when you press the button. Yeah, but there have to be, so simple exercises like this one are extremely helpful. Open up a chart if you're trading price action, let it run on the 1 minute, and mark out all those order blocks or fair value gap imbalances, stuff like that, and describe what you're actually seeing. Your relationship to the chart will become way, way better.
For better recognition of patterns, and
Of
then
course.
faster to faster analyze all the situation that it's
Exactly.
going in the chart itself.
Exactly. Yeah, I highly recommend this. Despite that, so journaling, daily debriefing form, you should journal anyway for the first 3 years, which is exhausting, but you have to do it. And then you have to create a playbook around the things you want to see. When I ask you or a mentee, I ask them, what are you looking for? What are you exactly looking for? Describe it to me in 30 seconds and tell me what is going on, right? So they have to know that. And as soon as they derive from this thing they are looking for, it's not within their strategy, right? So everything has to be
You
in
show him
check.
the screen and like you ask him like, "What do
Exactly.
you see?"
Yeah, what do you see? Yeah, it's also interesting. Well, it's also when you talk to some people and you are asking them what they are trading, and they are trading, they are um, an RSI strategy, right? You're asking
Yeah,
them, okay, you're trading an RSI strategy. Could you please explain me what the RSI is telling you? And you would be surprised how many people actually know what it's doing, or what is the moving average doing. People don't know it. People plot things on their chart and they kind of think, okay, this is going to work out, but they don't understand what is actually going on the chart. I mean, it's not complicated to learn, but the amount of effort people put in it is fairly low. Most of them, some of them. Let's put it this way.
yeah.
You know,
Okay. So, when did you start mentoring, and and
uh,
and why? What is
I
what
was
inspired you to mentor aspiring traders?
so first of all, trading can be really lonely if you don't have
Community.
a group a group of friends. I mean, if you're looking for some group activity in those internet forums, it doesn't work out because you don't actually know what the people are doing, if they're telling the truth and so on. And around 2018, I started with a one-on-one mentoring, which is still my main passion, because I was looking for like-minded individuals that want to push their trading to the next level. So I prefer people that have a little bit of experience. And yeah, I was looking for some exchange. And then there's also a huge benefit to mentoring. The more, or when you explain something to someone,
You
you
understand it better.
you understand it way better. And there were also some questions about things I haven't thought about. So that's a huge benefit, because some people see things obviously from a different perspective, and then they are going to ask you things, and you say, oh well, that's interesting. Okay. Sounds nice. So this was the main reason: exchange, helping people, talking to like-minded individuals. When you do a one-on-one mentoring, it always obviously costs my time, and I have to invest time I also don't trade at those times, so I lose money in quotation marks.
Yeah,
So it
definitely.
kind of has to make sense for me as well. And um, yeah, so this was the reason for the one-on-one mentoring. And then me and two friends launched a group mentoring, peak traders, at the beginning of this year, which is a broader approach in mentorings itself. So people can do a one-on-one mentoring, obviously, when they join the peak traders class, which is on Discord, but it's more about understand the market, understand what the market is doing. And it's also interesting and for me, nice to teach people how to trade, to explain them things. I like it because I'm sitting in my office alone for 10 hours and I like to help people. And as trading is my passion, I like to explain them why certain things are happening. And I also get a couple of good questions, which also helps me. Yeah. I mean, what I also do is only with the one-on-one mentees is at the end or towards the midterm, depending on how long they are doing the mentoring, is do a presentation. I'm totally new. Explain me what you are doing. And this is, there have been several people, one of the most important steps because they are thinking about everything they have learned, how they implement it, and they also put it out in a different way. You mean if I tell you explain this to a 10-year-old child, explain me what are you actually doing, right? So this is
Yeah,
beneficial.
it is much more complicated than it sounds.
Yeah, yeah. Put
especially
it into words.
when it comes to trading.
Yeah. But when you put something into words and actually explain, like I said, what you're doing, it becomes way clearer for you, right? Or you find some potential flaws, right? If I explain me what you do and the person can't answer, well, maybe there's some work to do. And this is also a reason why he or she is not profitable at the moment. You know?
Yeah. So how do you mentor mentees? So for example, I'm your mentee. Like, how do you start? How do
On a
you start
one-on-one
to
basis or
let's say both. You know what, one on one and also in a group.
on a one-on-one mentoring, I'm basically doing an introductory call. So the person has to like me and I have to like the person. So one-on-one mentoring is going for 3 months and we basically have to like each other, right? So if he doesn't like my style, no worries. He should do something else. Same for me. Then I'm obviously asking about the experience and what the potential problems are. So there are people that are not so experienced and there are people that are more experienced, but they are looking for additional improvements. And we are talking about potential ways to do that. So they have to have a certain knowledge, foundational knowledge in the things they do, right? I have to talk about their system. I have to understand their system. They usually need to have a trading plan. If they don't have a trading plan, I usually do it with them. So it's really personalized. I do one call a week with them. We have also have a chat room where they can ask questions, so they get feedback from me. They have homework to do depending on the things they have done already. So if the person has a trading plan, he obviously doesn't need to do a trading plan. But if there is more work to do, obviously there is more homework, and it is personalized to bring the person to the next level, always with the so I always say a mentor is saving you time. He's not making you profitable if you are unprofitable at the moment. So if a person is highly unprofitable, I say to him, we more likely get you to break even, because it's also a question, why are people trading? What are their money beliefs, right? Why do they want to get into trading? I also had some people that say, hey, I'm having debt. I want to get out of debt with trading. Well, that's a pretty shitty starting point to begin with, because if you're trading with a resource that you want to acquire and your money beliefs around that are kind of difficult, trading won't work out the way it's supposed to be. Right?
As
So you
well,
have
if
to
you start with the capital that you don't have and you borrow.
exactly.
So
Exactly.
even
So this
worse.
is causing a
So
problem. What is the environment the person is trading in? Is the person a family man that has a wife and kids? It's totally different compared to a person that is living on its own, right? Because kids can disturb you while you're trading if you're working from home, stuff like that. So it's really personalized. Um, we try to figure out the best way on how to push the trading to the next level. While compared to the Discord or to the group mentoring, so where everyone can join for a monthly fee or yearly fee, I developed a price action course that explains the fundamental of price action, right? So you look through this course, and the trading concepts in the Discord are based around those price action fundamentals. And then we have webinars on a weekly basis, and people can talk to me and chat to me. And yeah, it's broader based, right? And some people decide to do, hey, this is all pretty great. I want to do one-on-one mentoring. And some people are totally satisfied if they stay in the group or they system hop and jump somewhere else.
got it. So it's really, if it's enough for the mentee to stay in the group, he will stay. If he needs one
Yeah,
on one, he'll just schedule the one on one.
you know how people are. They are always looking for the next shiny thing, and if one trading strategy doesn't work out, they look for another way or another strategy. So they join another mentorship in quotation marks, right? And this works for a certain period of time, and then they move on. Okay, and me and Moritz, my colleague, are providing good value. But if people are not appreciating it, maybe it's the right word, but it takes time. Let's put it this way. So we try our best to start with the foundation, and then we have the webinars where you kind of go to where you advance. But if people don't want to do it or they don't connect with it, they move on. And then it's the way it is. You know?
Got it.
Yeah.
Any last advice that you would give? Any quote? Any book?
Sure. So the advice is for me is take it easy. It takes time. Well, depending on how stubborn you are, you first have to figure out yourself, right? You have to figure out yourself. What are your circumstances? Which markets do you want to trade and which system fits in? So this is something you have to narrow down for yourself. Then a good book that I recommend, although I don't trade the strategy, is from Adam Grimes. The Art and Science of Trading. So to be honest, I only read one trading book, and this is the one.
The
And this
Art
one,
and Science of Trading?
yes. And there's also a course workbook. He's pretty good at explaining it. This is a pretty good book. So in general, books from people that are a little bit longer in the market, Peter Brand, for example. But Adam Grimes is a good book. So if you read Adam Grimes and you understand the things also in terms of statistical probability, which also people don't understand a lot about, it's a pretty good book. Read this book, do the course workbook. Pretty much everything is explained in there.
Cool. Constantin, it was a pleasure. Thank you for coming.
Thank you very much for having me.
It was a pleasure. Thank you.
Thank you. Bye-bye.
Bye.
Bye.